Where we differentiate ourselves from the other junior royalty companies is we focus our capital strictly on royalties that are producing or near-term producing. Some of our competitors will give money to companies to go out and do exploration. We don't do that because we have our generative program where we are actually getting paid to generate those kind of royalties.
Are you still entrepreneurial at heart, or with more money flooding in, are you changing your view of life? What have you learned in the last 6 months? Because you're clearly a different company. Hello and welcome to Crux Investor. First of all, thank you very much for watching this video. If you like it, give us a thumbs up and do leave us your comments. We do try to get back to absolutely everyone. And for those of you who have not already done so, please click the subscription button in the corner of the screen. And of course, if you want to see more videos like this, click the notification bell. We speak today to Trey Wasser, who is the CEO of Ely Gold Royalties. And we spoke to them back in August last year. They were about a $20 million company then. Since then, the share price has doubled, so obviously doing something right. We talked to him about what his growth plans are for this year, and also with the involvement of Eric Sprott, we wonder what he's going to be able to do for the company as well. Trey talks to us about a number of the targets that they have, objectives, and their acquisition plan for that growth. So take a look in the description below where we describe it in some detail. If you're interested in anything in particular, click on that timestamp and that can jump you straight to that part of the video. Anyway, let's hear what Trey had to say. Hey Trey, how are you, sir?
Very good. How are you?
Not bad, long time. I think we spoke in crikey, end of August, right?
Yeah, it's we've been busy boys since then.
I saw that. That's why we wanted to speak to you. Plus, your share price has doubled, which is even better, right? So why don't you kick off for people new to this story and give them that 1 minute overview, and then we'll pick up on some of these good news stories.
Okay. Yeah, Ely Gold Royalties is a junior royalty company. Meaning that's really defined more by market cap. You know, we're now right around $100 million fully diluted market cap in a junior space with other companies running 100 to $300-400 million. And we generate royalties by purchasing royalties from third parties that are existing on producing or near-term producing assets. And also we generate royalties through our extensive property portfolio in Nevada and by selling the properties and retaining a royalty.
Right. Okay. Last time we spoke, you were kind of helping us understand where you positioned yourself, and there's that kind of sub $300 million, there's 4 or 5 of you around that sort of level, and then you kind of step up to your Sandstorm, sub $1 billion, and then above that's the Francos and the Wheatons of this world, which are several billions of dollars. So you're trying to work your way up that curve. So could you kind of maybe update us as the types of deals that you're looking at now compared to back in August?
Well, sure. The main thing for us is with the growth has come the ability to look at larger deals. And this is where you really get the leverage in a junior royalty company, and why, in our presentation, we have a slide that shows even the big boys, Franco and Royal Gold, the incredible compounded growth they saw in the first 3 or 4 years in existence. And the reason is that as we grow, when we talked in August, we were doing $1 to $2 million deals because we were a $25-30 million market cap. Today, we've been looking at more $5 to $10 million deals, and so each one of those obviously adds a lot more leverage each time we do them. And we've announced 2 here recently that we're in the process of closing that are $7 to $8 million deals.
Okay, well, I mean, you said, I think the phrase you used with us back in August was, that's the point at which you can do deals of those size, you'd see some kind of hockey stick type growth for you. And obviously your share price and your market cap would suggest that that has been the reaction in the marketplace. So what was that sea change there? Was it getting access to Eric Sprott's money? What's allowed you to kind of do these bigger deals?
Well, that certainly didn't hurt. The stock price helped us we did one small financing with Eric, and then he also, we did a deal in October, November, where he gave us a $6 million line of credit, convertible line of credit. And so that helped. Also, with the stock price increase, we had a lot of our warrants exercised and gave us some capital. So just that natural growth that you see as the company grows, warrant expansion, we've done it other than the line of credit without diluting shareholders much more from where they were.
Right, and are you seeing some? I mean, we've got to talk about them. We can't have this conversation without talking about the market since August. Obviously, gold saw a dramatic increase in price, really helped, and then, of course, more recently, the stock market's doing a reset. I think we'll call it. I mean, have those two things affected your business positively or negatively?
Well, look, it's a difficult market now, and luckily, like I said, we've been cashed up, so we're able to execute the deals we have on the table now, and by drawing on the line of credit and using cash on hand. So it's been very difficult market, and actually, I think from August, I'm not looking at a chart here, but I think while gold made a little run here up to high 1600s, it's back down to 1550, probably about where it was in August. And the stocks, for the most part, in the junior mining sector and the royalty sector, have seen a significant pullback from their highs. We at one point touched $1 a share, and it pulled back now to 60 cents, which is still great for us as far as the performance this year, but not we have given some back.
But how do those market conditions help you do deals? Does it make so is money readily available for the kind of companies that you're talking to, or are you a kind of lender of last resort to them? I mean, what does that conversation look like?
Well, look, most of our royalties we're buying from third parties, and again, most of our deals have come from private or third parties. So we are seeing, people where the overall stock market has dropped and cash is king, more apt to sell these royalties than they were when, their stock portfolios were flying high and they didn't really feel like they needed the cash. So we're seeing some opportunities open up there, but for the most part, we haven't seen a big effect. But let's keep in mind here, this market correction, the severity of it really only started here in the last 2 weeks. So.
True, and I think it's been coming a long time. But if I may just stick on this topic for a while, so you've kind of got this economic reset in the equity space. You've also got people, banging the drum of $2,000 gold. I mean, where do you sit? What are your thoughts about the market?
Well, look, things are kind of a mess out there, and of course, this coronavirus has just even sparked more uncertainty, that type of thing, and it's driven the central banks around the world to start to stimulate the economies again, and we have this oil price drop that I don't know what the significance there is going to be, but longer term. But all these things are inflationary. When you have the Federal Reserves around the world basically printing more money again, and injecting stimulus, and that's generally good for gold.
It's generally good for gold, but again, it hasn't necessarily been the case for some of the bigger producers who've taken a big whack to the bottom line. It seems like the rules don't apply anymore. I mean,
well, look, I think what you have to differentiate here is that the stocks have dropped quite a bit, but the bottom line for these gold companies is staying quite strong. Now, gold this week has pulled back, I don't know, maybe $75, $80, back down to the 560 level, or 1560, I'm sorry. So, and the stocks have dropped quite a bit more, but their costs are not increasing. In fact, fuel costs are going down. So a lot of their operating costs are going the other way. So I think you have to differentiate here, and I think some of the producing gold companies right now are very attractive buys, and of course the royalty companies.
Especially the royalty companies, I thought you would say. So give me. Thanks for talking about the market. It's difficult to call right now. I think everyone's sort of waiting to see what happens at the moment, and I know we certainly are. Can you help us understand the types of companies that you are looking at? You've talked about deal sizes, but that doesn't necessarily tell us much about the companies themselves. I think you've hinted some are you're buying from private companies and so forth. Are you also being reached out to by public companies who are perhaps struggling to raise cash? Where do your deals come from?
Well, look, what we don't do in the royalty space, and have not done up to this point, and typically you don't see junior companies doing a lot of it, is we don't lend money to companies for development of a mine to earn a royalty. The larger companies with more cash will be part of a financing package when a mine is being built. That's how the largest Franco-Nevadas and even the Sandstorms generate most of their deals. What we do is search out third-party existing royalties, and generally they'll either be from companies that had sold a property way back and kept an interest, or in some cases, many cases, it's private individuals that have these royalties, and in some cases, it's old royalties that have existed since the 80s on properties, and the heirs own them. And then of course, and where we differentiate ourselves from the other junior royalty companies is we focus our capital strictly on royalties that are producing or near-term producing. We have to see a window, very short window, to where these royalties will be generating income for us. Where some of our competitors will give money to companies to go out and do exploration. We don't do that because we have our generative program where we are actually getting paid to generate those kind of royalties. We stake properties, we consolidate property packages. We've been very successful in selling to the major mid-tier producers, again, mainly in Nevada, properties, and retaining the royalties. So we make revenue when we sell the property and then still retain the royalty. And it allows us to focus our current capital on just those producing and near-term producing royalties.
I get that. I mean, I asked the question because, obviously, again, when we talked to you, you were about exploration, development, and hopefully near-term. But as you've had access to capital, you have evolved. You've evolved your thinking. You've evolved your position in the marketplace. And I guess you're having different types of conversations now. And I'm interested in that, evolving process that you're going through. So, because again, I think there's the numbers we talked about. You had something like 70 different properties last time, with 33 royalties, 20 properties, and sold on 4-year option plans, and another 25 properties available for sale. So the way you were structured day one is not the way you are to now, which is not even 6 months later, right? So what does the end of this year look like for you as you keep evolving?
Well, maybe the best way to look at that, looking at the chart of our revenue based both royalty revenue and the sale revenue from the sale portfolio, and seeing what that is looking like over the next few years. We expect to do about 5 to 6 million in revenue this year, about evenly split between royalty revenue and sale revenue. But starting next year and going into 2022, we have these projects we've recently purchased since the last time we talked that'll be starting to generate royalty revenue, and we'll be kicking up to $8 million, $12 million by 2023. with what's on the books today. We expect to be much larger by then with more transactions, but just what we've put on the books since the last time we spoke, has about doubled that revenue profile, mainly on the royalty side. And if you'd like, we could dig in a little bit and talk about some of the exact transactions and how they set up.
Yeah, let's do that. But let's finish off on this bit, because again, I'm just trying to get an idea of how you guys are changing. Are you still entrepreneurial at heart, or with more money flooding in, are you changing your view of life? What have you learnt in the last 6 months? Because you're clearly a different company.
Well, look, this business plan, we're just executing the business plan. And as I pointed out before, we're at that hockey stick point in the curve where the leverage really kicks in. So being an old bond trader, it didn't bother to me whether I did a trade for $1 million or $10 million or $100 million. It was just adding another zero. The trade basically is the same. So that's the same thing we're looking at here, just looking at larger deals and deals money-wise and deals that have more impact to our growth because of that they're adding to that either current revenue or near-term revenue line with additional royalty income.
Okay, so you're not getting casual about this. It's just when we see companies grow and develop, money comes in, people change, they forget what they're out to do. They forget the business plan and they stop delivering. So you're very clear about where you're going, are you?
We're still having a lot of fun doing this, and I think you can look and see really in the last since the first of the year. Let's just say we ended last year. We purchased 4 producing or near-term producing royalties. We entered this year with the one of our major goals was to add 4 more producing or near-term producing royalties. Well, here it is, the middle of March, and we've already announced that we've purchased 5 producing or near-term producing royalties. So clearly, we've already met our goal for the year. Now, your question is, does that mean we're going to take the rest of the year off? And the answer to that is no. We intend to, just keep doing the deals. We've announced, I think, 3 property sale deals in that side of the portfolio since the first of the year, and probably 6 or 8 since the last time we spoke. So, no, we're still very active, and we're fortunate in that, while most royalty companies offer geographical diversification with properties all around the world, we really don't. We're pretty much focused in Nevada. The good news is that Nevada is the #1 mining jurisdiction. It's very close to home here. We don't have to even take the passport when we travel there. And we know Nevada better than anybody else. So we're able to ferret things out that, this recent transaction that we announced for purchasing this VEK corporation with 5 royalties, 2 of them near-term producing, that's something that Franco-Nevada and our competitors have been chasing for years.
Well, tell us about that deal, because I think you have said that is going to be a very meaningful. It's going to be like the Fenelon deal. It's going to be very meaningful for you. So break that deal down for us and where the certainty and confidence comes from about that.
Well, VEK is a very interesting situation because this is a corporation that was started by Ralph Roberts, who's a legendary geologist. He worked for the Geological Survey in the 60s. He's the one who really identified the whole lower plate Carlin style deposits. Really was a mentor for some of the people who made those discoveries, John Livermore and Andy Wallace and Homestake Mining. And but at the time, this in the 60s and 70s and even early 80s, he was working for the survey, so he couldn't stake properties. But he basically told them where to drill at Gold Strike, where to drill at Marigold. And in the 80s, he retired and was able to start staking properties. So these are properties, that 5 properties, 4 of them are leased to the Newmont Barrick joint venture, Barrick Newmont joint venture, and 1 to Marigold to SSR Mining. And they're just critical Carlin trend. I mean, 90210 area code kind of properties. The Marigold, of course, is a producing mine. We've got some key claims there that are in the mine plan, with deposits that have already been identified for starting in 2022 and expanding into 2028. Then the other key property is called the Wren. This is some property just north of Barrick's Gold Strike mine, which has produced over 54 million ounces. It's an extension of the underground mine. It's right on the major fault, the post fault that is responsible for all this mineralization. It's just east of Barrick and Premier's South Arturo mine. It's got 2 million ounces identified on it. And while we haven't been to site yet, the people at Barrick tell us that they've got a permit to mine those 2 million ounces, and are excited to get in there and not only mine that, but also explore that entire property, which could host many more ounces.
Okay, well, let's talk about, you used a phrase there, you said they're ready to start in 2022. By that, do you mean get into production 2022, or?
Correct. In the case of Marigold, it's in their mine plan. Their 2018 43101 has a mine plan. It shows the pictures of each year which pit is going to turns blue, and we've got a copy of that map on our website, and so we're very confident that one's going to be producing. And the Wren, again, we know that it's permitted and that they are drifting in there now underground. The Wren is a very deep deposit, about 3,000 feet, and that's why it hasn't really been explored to expand the 2 million ounces, but we think we'll get much bigger.
So for you and for shareholders, in 2 years' time, you can start to see some revenue flowing back into your company. Yeah, I guess that's what people care about. Right. Okay.
Exactly. Especially in the junior space. The junior space is a lot about not what your cash flow and revenue is now. Of course, the key for us, and something else that's happened since the last time we talked, is we are very much cash flow positive now with some of the acquisitions and royalties and the portfolio that we started with or had last year when we spoke.
Well, you talked about last year.
We can weather any storm.
Yeah. You talked about a 4 million in revenue in 2019 and a G&A of only 2. So, positive cash flow there, but you've had to spend a lot of money, and I know you've got this facility from Sprott, and money is getting cheaper for you to raise as your market cap goes up, as your share price goes up. So, it's all good news, but people need to understand with royalties and streaming, the kind of annuity stream type structure here is there are delays to cash flow, and ultimately small junior companies rely on cash flow, but you don't appear to be suffering from any of those issues.
Well, I think if you look at our peers in the group that we compare ourselves to, we're kind of in the same position. We've got that revenue coming in, and now we added another transaction here this year already, and that was buying from Eric Sprott a 0.5% royalty on the currently producing Jarrett Canyon mine. Mm-hmm. So that mine will produce about 135,000 ounces this year. That equates to about $1.5 million in revenue for us that we've added. Now, we haven't closed that transaction because it'll take Eric over 20% ownership. So we need approval from the shareholders at our annual meeting in the first week in May. However, the deal is structured where We signed that deal on February 3rd, and from signing, we are accruing the royalties. So we will get almost a full year of royalty payments from that this year.
Okay.
Combine that with a few other smaller royalties that we've purchased, and we now have 3 that are producing. So the Isabella Pearl has gone into production. So that's revenue we didn't have last year. We should see about 350,000 from that royalty this year. The Jarrett Canyon per ton royalty, we in last year's numbers only had about half of the year. We've also seen with the price of gold, the per ton rate has gone up. So we should see about 400,000 in revenue from that this year. So all combined there, in deals since last time we talked, and we've added a little over $2 million in royalty revenue that'll be on the books for 2020.
Right. Okay. So that,
and going forward, of course.
Of course. I guess what I'm interested in is the way that these deals are getting you known. Okay, you're being known in the market. Our deals getting easier to do because you're doing more deals. You've been around for a while. Obviously, Eric getting involved is very, very helpful. So are deals easier to do? Are people coming to you, or because when you're starting out, it's a little bit difficult, isn't it? Who are these guys?
Well, we've always had the advantage of Jerry Bachman, who runs our Nevada subsidiary and is our main land guy, and Bill Sheriff, one of our directors. Between them have about 80 years of experience operating in Nevada. So not only does that mean they know where the best properties are, but they know where these royalties are. So we're able to go track them down. And, of course, another thing we do that I think is very important and is borne out both in our generative program and in our royalty purchase program, is we get to know an asset. And once we get to know the asset, then we look for other opportunities around that asset. So Jarrett Canyon would be as an example. We did a lot of due diligence when we bought last year the per ton royalty. So I've been after Eric to sell me this 0.5% NSR for a while. And don't be surprised if later this year you see another transaction on Jarrett Canyon, because we're just very excited about that asset. It's got a tremendous upside potential, an excellent land package that's never really been explored. And then you can look at the property portfolio and see where at Isabella Pearl, where we have one of our producing royalties for 0.75%, but then all the exploration ground where Gold Resource is drilling now, we have a 2.5% royalty. And then we have on the satellite projects to that, Mina Gold and County Line, we have royalties. So over the years, we expect we might be paid at Isabella Pearl on multiple royalties. And the same at McEwen's Gold Bar Mine. We just added since last time we talked, we've done a transaction where we sold them our Gold Bar property and kept a royalty. I think they assumed the Gold Canyon property. And then we purchased from private parties a royalty on some key exploration ground, and just announced another purchase of some claims that are leased to McEwen, both on some key exploration ground and a deposit there of, we're not sure how big that is, but we think it's at least 50,000 ounces that will get mined at that. So we're okay. That's a big part of how we track these things down, is it's not always top down and just looking for a royalty, but being focused on assets where we know the project very well and track things down that way.
Yeah, I think we talked about that last time. Was again sort of understanding technically the potential for the project, and obviously timing for when it could actually start generating cash flow for you. Just finish off on Eric because he pops up a lot in these conversations because he's spread far and wide. Obviously, he's getting more meaningful for you. He's not on the board, but he is a large shareholder. Is he? How often do you hear from him?
I talked to Eric quite a bit. I'm probably one of the, he's intrigued by the royalty space. We got involved with him because we had 3% at the NSR at Fenelon, and we sold him 1%, and he got involved with the in a small private placement, and then did this the line of credit, and now more recently done the Jarrett Canyon thing. We, like I said, still working with him. I talk to him regularly. I mean, at least a few times a week, and probably one of the few guys who can say he probably calls me more than I call him, because he really is intrigued with the royalty space, and he's never owned, believe it or not, in everything he's owned, he's never owned a royalty company before. So
That's interesting to us because again,
he's excited
because we see his name come up, and he obviously has spread his money far and wide, and it feels like there are some things that he's stepping back from, and some things he's more interested in than others, and it's interesting to know that he's this fascination for the royalty space. Okay, and can I just ask you about the Wallbridge and Balmoral deal and what the implications are for you?
Well, I don't know that that's so important to us. We don't have a royalty on the Balmoral ground that's being picked up there.
Okay.
Only on the original Fenelon ground. I think the transaction is going to be important for Wallbridge's efforts to expand what they call Area 51, which is this lower grade Detour Lake type of potential deposit. But that's very, very long term. That'll take years and years and hundreds of thousands of meters of drilling to define, even define something there that's that's big enough to warrant the production.
Okay.
What we're most excited about at Fenelon is the work they're doing right there in the high grade section, which now they may find other high grade sections on the Balmoral ground, but it's far enough away that it won't. They'll continue to go deeper. They've now, with their drilling since the last time we talked, they've outlined about 2.5 to 3 million ounces of high grade, which is literally right below the workings where they did the bulk sample. In fact, it's the 6th level drift that they're actually drilling from to be able to outline that underground. It's getting so deep, and again, I have a really nice slide where I've done an inset on the current resource and the vein structure there, and inset in the current mine infrastructure down to 6 levels. And you can see that as they get deeper there, in that part of the world, the structures tend to be almost 90 degrees, perfectly vertical. So consequently, you're in a situation where to drill deeper, you keep having to go out further and further from the surface. And so the idea is to get down, they got down 6 levels underground, and they're drilling, already from about 800, 900 meters underground. Now they've defined this 2.5 million ounces, and they have applied for a small miner's permit. And what we're anticipating, and what the company is saying they will probably do, is go down another 6 levels, not only to be mining some of this high grade that they've identified, but also to get down another 6 or 8 levels so that they can continue to drill underground and find out just how big this thing is going to get.
So what are the implications for you, though? What you and your shareholders? What does that tell you?
Well, if for the grades and thicknesses that they're seeing in the recent drilling, and extrapolating out the the results that they got from the bulk sample at the year and a half ago, its grades of about 20 grams a ton is, I think it averaged 18, 19 grams a ton. They seem to be finding plenty more of that. Like I said, now, and when they did that, they had only had about 80,000 ounces outlined when they went and did the bulk sample. But our income on a 2% NSR with no deductions for toll milling, even with the small miners permit of 400 or 500 tons a day, at today's gold prices, that'll generate $1.5 to $2 million a year of revenue for us, and we think if it could literally start later this year because they're waiting for that permit. And while they, ideally, they will ultimately probably build their own mill on site. There is not a mill there now. They're trucking the ore from the bulk sample and from any other work they do near term to a mill that's 100 kilometers away. So ultimately, once they define the how much they have there, then and decide how much, what kind of production would drive what size of mill to build. And we think in the meantime they will they'll be enticed to produce at that 400 or 500 tons a day, and ultimately it could get much bigger. I mean, that could be at the size they're finding, that could ultimately be a 150 to 200,000 ounce a year producer, which would produce at today's gold prices for us, $4, $5, $6 million a year. So
Exciting times. So there's that
incredible upside in that one. Yeah.
Fantastic upside. So your shareholders are going to get dividends this year, are they?
I'm not sure this year will be the dividend year. It's the goals, and under the goals that we set for 2020, we gave ourselves a dividend program 2000 to 2021. We believe that a dividend program is essential for a royalty company, but we want to make sure of two things. One, we want to make sure that the dividend is meaningful. And meaningful, I think a 1% dividend would be meaningful. We don't want to do too small a one because for a small company like ours, there's a certain amount of fixed costs and expenses that go with paying a dividend that we have to be cognizant of.
What are those?
And what we want to be able to, and the second thing is, we do not want to have to institute a dividend program that might have to be trimmed back. We want a dividend program that has all the potential to grow. So while it may be late 2020, but certainly by 2021, with the assets we have in the books right now, all other things being equal, we'll be instituting that dividend program.
Tell me about this, because I'm learning all the time here. So what are the associated costs? You make 2 points there: associated costs, and then obviously some dividend plans that you don't want to necessarily have to cut back. So talk me through those.
Well, it's just first of all, there's an additional accounting expense, but it's just the physical issuing of checks and mailing them out. You have to have a transfer agent. You have to issue a check to every one of your, hundreds, maybe thousands of shareholders. And it's just that basic expense of doing that. There's a certain amount of, like I said, accounting and legal expense that goes with that as well. But just the physical part of mailing out the dividend checks and unfortunately, with the dividend program, there's not really a lot of alternatives. It's one of those things that is still, done by a paper check, printed and stuck in the U.S. or Canadian mail, and we know how how dependable that Canadian mail can be.
Right, and then the second point you made there was you said you didn't want to have to reevaluate or cut back on any potential dividend plan. I mean, why would that ever be the case?
Well, I just don't. That's just not the optics of a growth company, and of paying a dividend. I don't. I think that you institute a dividend program, you put down all the initial expenses and everything else, and you have that anticipation in the market. I mean, I I've never heard of anything good happening with the stock when they cut their dividend. While at our stage it might not be a mortal mistake, but it just I think the idea of a dividend program is we get it instituted, we make it meaningful, and we make it something that can grow over the years as our portfolio matures. And that way, when people look out, if they can feel they can start to depend on that dividend, and they can say, well, geez, if I look at these guys' profile, if I buy the stock today, it has a 1% dividend, but I can see down the road through 2022, 2023, when you start to look at that growth in revenue that we have and that dependable royalty revenue, especially, then they can see their way that, geez, with dividend increases, their yield on their initial investment is going to be a very handsome dividend.
Beautiful. Okay, so you've had a great 2019. You've started 2020 off storming. You hit your annual targets already, but you're not going to rest on your laurels. So it's going to be a good 2020. Are you guys going to reward yourself for that?
We have a pretty set bonus plan. I mean, I think, again, keep in mind that we operate like a royalty company. Our overhead is low. We have we do all of this with 2 full-time employees, Jerry and myself. Jerry does all of the field work and a lot of the property, and I do the sales, and we together ferret out the royalties. I do most of the contract work before it even gets to the attorney. So we do all of that ourselves. So while we do have a bonus program that we've instituted every year and will this year, it really only affects Jerry and I and a few part-time employees that aren't making that much anyway. So Jerry makes sure that he keeps reminding me it's bonus time.
I bet. But these conversations are a lot easier when the share price is heading north rather than south. So long may that continue. I'm sure your shareholders won't mind if things continue as they are. Trey, thanks so much for the catch up. Brilliant. Things have gone quite well for you, and I do hope they continue going that way. It sounds like some big deals happening later this year. Keep the focus, keep the hunger, keep delivering.
Yeah. Well, keep if the shareholders and your subscribers, clients, just keep an eye on us and watch the news. You'll see steady news flow from us, and like I said, don't be surprised if you see another transaction on Jarrett Canyon. Don't be surprised if you see another transaction on the Ren deposit. We've got our eyeballs on things, and actually we're seeing very good currently interest in the property package. So those sales will continue. Got an email from someone in Europe today looking for property. Just did a deal with a British company, or actually an Irish company, coming over here.
Yeah.
And in fact, the other European one it's both are Irish, 2 different Irish companies.
Right.
But still seeing good demand out there. And again, we're putting together some property packages. We just announced a deal where we consolidated Tonopah district. Picked up a bunch more patented claims, and we just sold that to BlackRock for $3 million over the next 4 years. So again, as we're growing, we're also growing in the size of those sale transactions. That's the largest sale transaction that we've done.
Fantastic. Well, Trey, stay in touch. Don't leave it so long next time. Sounds like there's a lot of news coming down. So pick up that phone and give us a call when you've got something to say, okay?
All right, sounds good.